Good morning, everybody. This is the live market open for Wednesday, June 29th. This is our weekly show. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. We'll cover the events in the markets. Of course, we had some stability for now. Recent developments. We'll cover charts and levels the next 7 days or so, the next week, until long holiday in the United States. And of course, your questions. You're welcome to ask them in the chat. If you cannot see the chat box alongside the screen, please go to tlk.io/fxstreet-forex-live-video. Okay, so what's going on in markets? We had yet another turnaround Tuesday. After the big Brexit crash, we had a recovery yesterday. It wasn't on the US GDP. It was sort of the necessary turnaround that we always see after big moves. The big question is, we'll talk about that soon, is what's next for Brexit, and maybe we'll have a regret or an EU turn. Okay, maybe it's a bit too much for markets, and maybe they'll overturn the will of the British people. In the meantime, it's a political mess. We had yesterday the EU summit with David Cameron, outgoing UK Prime Minister, meeting his colleagues Angela Merkel, François Hollande, and the other members of the European Union. It was a bit awkward. There was pressure on them to invoke Article 50, the official exit out of the European Union, but not Cameron and not Boris Johnson or whoever will succeed him in Downing Street as Prime Minister of the UK are in no rush. That's what also leads to speculation that this will not happen. Also in UK politics, there's turmoil in the British Labour Party. They're a total mess. But they're in the opposition. More importantly, in the government, the Conservative Party, a contest opens today. Candidates can cast their pledge to voters to become the party's leader, and the candidates will need to present their candidacy up to tomorrow. But we'll have a new leader on September 9th, so 2 months away from a new prime minister in the UK. And of course, as I said, uncertainty about Brexit, regret. But let's look a bit at the charts. Okay, starting with the British pound today. Good morning, Ramon. Good morning, Luca. We talked about this big crash on Friday, and then we had an extension of this on Monday. Of course, we have a weekend gap that has not closed, okay? We had a big crash on Friday, a big recovery. A recovery worth at some point about 600 pips, a move that you don't see usually, and that was just the recovery yesterday on Friday after the big move, about 1,700 pips. Well, on Monday, we opened much lower. 134.80 is strong resistance. That's where we stood on Monday at the best moment, but then we crashed to even lower ground. 131.20 more or less is weak support. The lowest support, the lowest level since 1985. Since then, we had some kind of recovery. I would note 132.20 or 132.30, which was the Friday's low, and also sort of another line on the way down. Okay, on the top side, 134.80, but we haven't actually reached that level, so resistance could be lower. For a change, we have some stability here in the British pound. So today we have, so far, it's very balanced. And as we speak, maybe pound dollar is turning positive on the day. Almost there, 133.40. No change at the moment. We are already at lower ground. I think we're waiting further political developments. Okay, and now we're in positive ground for the day, but basically stable. Stability is something we haven't seen in the pound, for some time. Let's continue with the euro-dollar. Euro-dollar was hit, I must say. I expected it to fall even further. This here is the big Brexit crash. So at some point when we thought that we'll have some kind of a remain vote. We reached across the 114.10 line, and then came the big crash. 109.10 was the low. Since then, we had a recovery already on Friday, then a weekend gap lower, but euro dollar did close the gap. Euro dollar is showing relative resilience. 111.30 is some kind of resistance, followed by 111.90, 112.50, support at 109.60. This week's low, followed by 109.10 and 108.20. Okay, so this morning also euro dollar is relatively stable, hugging this line of 110.70. In any case, the gap is closed. I expected euro dollar to fall something like 40-50% of the fall in the pound, and it's not the case. It was a much lower fall. Euro dollar remains frustratingly stable even in these very turbulent times. Okay, well, everything is relative, but not as much as I had expected. Dollar yen, this was a big crash on Friday. 98.80 was the low, but we probably had there an intervention by the Bank of Japan. We bounced back all the way to 103.30. Since then, we fell to lower ground. Support here it is at 101.40. Currently, dollar yen again doesn't look so good. This morning, it's falling again, showing us that it's not really happy with the situation. Okay, so 102.25 at the moment. Well, on one hand, safe haven yen is in high demand. On the other hand, it's the Bank of Japan is always there on the sidelines to intervene. Dollar CAD, was a bit choppy here with dollar CAD. Relative resilience among the risk currencies, it had the strongest reaction, showing us a lot of strength, even as oil prices did fall. Since then, oil prices have recovered. Anyway, 130 remains the support, followed by 129.10 resistance. Well, it becomes weaker resistance at 130.80. Dollar CAD is showing strength. At some point this week, oil prices did fall under 46. Since then, they have recovered. We're basically now somewhere at resistance around 48.30. It's hard to get back to the 50 level, especially with everybody talking that Brexit will have global dampening effect on the economy. So maybe dollar CAD is limited also to the downside, but it isn't going anywhere fast. Okay, Aussie dollar. It did fall, of course, with the Brexit, recovered quite nicely, open a weekend gap and not really close it. But it could have been worse for the Australian dollar. Currently at 74.10, resistance there at 74.40, edging its way up this morning. Okay, 73.75 is support, followed by 73. Levels we're familiar with, so we lost the highs, but I cannot call this a crash. Kiwi dollar holding up above 70.50. 70.50 was a double top, remains a separator of ranges. Currently very close to 71. I would say maybe resistance is better here at 71.60. All in all, lots of strength from the Kiwi dollar. We had a comment from, I think it was the Minister of Finance in New Zealand, saying that the Brexit will make the New Zealand dollar a bit attractive. Maybe he regrets these kind of comments, but it might be true. Anyway, we did fall under 70 with the big crash. And just before we had the news from Brexit, we almost reached 73. So we're clearly in lower ground, but also here showing a lot of strength, especially this morning. Nice rise of almost 50 pips. Okay, dollar Swiss. The Swiss franc also is some kind of a safe haven, but of course, third in line after the dollar and the Japanese yen, of course. Sorry, Japanese yen is first, then the dollar, then the Swiss franc. Currently above 98, which is some kind of support. 98.50 follows, and 97 is the level below. Euro Swiss continuing its recovery. The bank, the Swiss National Bank, did admit intervention on Friday. We did have Euro Swiss fall all the way to 106.20 and then make a comeback. Currently, we're back to the familiar levels. Okay, so 108.66. We could also see gradual rise to 110. Luca asks, as the dust settles, do you think we may see dollar give back gains as people realize Fed back on the sidelines with Brexit. Yeah. Well, already on Friday we talked about the fact that the Fed is not likely to raise rates anytime soon. I would say in the next year or so. There's even a chance that the Fed could cut interest rates. Let's take a look, if you already asked this question, at the probability of a rate cut. Okay, cut, not a hike. So, well, at least let's refresh this to get the updated data. Well, it's basically the same. For the next meeting of the Fed in late July 27th, there's a 5% chance, according to bond markets, they're not always that correct, of course, for a rate cut in the US. This is a change from a small chance of a rate hike. Okay, Brexit really changes the picture. 10% chance in September, November, according to bond markets. And then in December, still expectations of no change, but at least there are fresh expectations for a rate hike. So I don't see a rate hike anytime soon. If things really deteriorate quickly, there is a rate cut on the cards. I would say that the chances of a rate cut will be only if things really deteriorate quickly, if next week's jobs report in the US is also bad, and if fresh data shows growing signs of a recession, further falls in stock markets. I don't see the Fed wanting to reverse course that quickly, but the easier choice is just not raising rates, okay? So that's where we are at the moment. Let's continue with more charts and also talk about the chances of an EU turn. Euro pound. So as I said, the reaction to Brexit was much, much bigger in the pound than the euro. The proportion was, for me, a bit disproportionate. So we had a big leap in euro pound. We went all the way above 83. Okay, got even closer to 84. Let's see, these are levels last seen a long time ago. Yeah, in 2014. So it's more than a 2-year high. Okay, close to a 30-month high. Anyway, we found some stability here just under 83. I would say that 83.30 is some kind of resistance. And yeah, but this pair is also looking for direction. Currently, we're stable. No change on the day. I just realized you look like Inigo Orejon. Yeah, there is some similarity. I can put his picture. For those who don't know, he's the number 2 at Podemos, okay? He looks, he's younger than I am, okay? But we have the same kind of glasses, I guess, and same, he has hair. I have a bit less. Anyway, currently with Euro Pound, we're stable just under 83. Euro Yen, here we had, of course, a big crash. Yen is a safe haven. Euro was carried away just a bit with the pound. Currently at 113.35. We dropped under 110 at some point on Friday, but stabilized. I would say 114 is some kind of resistance here. Euro Yen is getting used to much lower ground. Lines to watch here are, yeah, I would say these are the lines to watch. So more or less where we are now, 113 to 114. Current levels on Euro Yen. Pound Yen, here we had one of the more spectacular crashes seen in quite some time. So let's put the daily chart just to show you what went on here. At some point we reached resistance at 160 when it seemed that the Remain camp would win. And from there we fell all the way. The new low in pound dollar, the dragon was really slain by St. George or whoever, 113.34, a drop of nearly 2,700 pips. On Monday, we had further falls in the pound, but not so much in the yen. I mean, the yen did not reach new lows. Dollar yen did not reach new lows. Currently at 136.90. Also here this morning, we're seeing rare stability in the dragon. Resistance here at 138. Huge moves here. Lots of money to be made and to be lost as well. Okay, so this is a very wide range for pound yen. Okay, crazy days in markets, right? And we already talked about the price of oil. So let's talk a bit. Let's cover also other events. I think economic indicators in the US and elsewhere will gradually become a bit more relevant. So yesterday we covered on FX Rate the US GDP. It came out slightly better than expected, 1.1 instead of 1%. It's an upgrade. It's the final read, so-called final read for Q1 2016. But basically, it's not that good. First of all, there was a fall in consumer spending, which is not a good. And in general, remember, it's an annualized figure. So we had, if you compare this figure to a UK figure, it's only a growth rate of 0.3 quarter over quarter. And 1.1 in Q1 2016, 1.4 in Q4 2015. Very slow growth. Q2 is expected to be better, but we had this durable goods orders on Friday, which was bad, and I'm not sure that Q2 growth will be that good. So also the domestic figures in the United States do not support a rate hike at the moment. And of course, everybody's waiting for the figures, at least in the UK, for Q3, the post-Brexit figures, and they'll probably show a sharp fall, a big contraction. It's not only the stock market that is crashing in the UK, it's also the real economy. Okay, orders from UK companies have fallen. I mean, from the Eurozone. And this could also, the uncertainty also has an effect on the US economy. Apart from that, we had consumer confidence in the US, which actually beat expectations. Maybe not all is lost, but it does not reflect Brexit, okay? I'm not sure that US consumers are that aware of the political events in Brexit, but it has an effect on a bit on the sidelines as well, okay? And, Japanese retail says it doesn't matter that much. What's going on today? First of all, we have an ongoing scramble in Brussels. So yesterday we had the EU summit, including David Cameron. Now David Cameron is back home in London, facing Parliament, I think, today. It's going to be interesting. Prime Minister's questions. Jeremy Corbyn, leader of the Labour Party, is on. His party wants to throw him out. His members of Parliament voted against him in an overwhelming majority. He refused to quit. It's not a formal. Binding decision. He will ask questions. Will challenge Prime Minister David Cameron, which is also on his way out. So it's going to be interesting. In Brussels, the other 27 EU leaders are meeting. Now that they don't have to be nice to David Cameron, I wonder what they'll talk about. Anyway, nobody really knows how to grapple the situations. Apart from that, we just had a Spanish CPI. Let's take a look at that. Again, economic indicators do not move markets at the moment, but I believe things will, return to some normality at some point. So deflation here in Spain, where I live, is not as bad as expected. It's 0.9 instead of 1%, the drop in prices. We have some figures from the United Kingdom, consumer credit. Everything is irrelevant because it's pre-Brexit. We also have the German CPI. It's dripping throughout the day from the various German states, and the final figure is 12. It should shape ECB policy, but the ECB policy will depend on the ramifications of Brexit. Perhaps more importantly for the Fed, maybe it will not move markets today, but you have personal spending, personal expenditure, and the most important figure for the Fed is the core PCE price index, personal consumption expenditures, which exclude the volatile figures. This stood on 1.6 year over year last time. Let's see how it stands this time. The Fed became more worried about jobs and less about inflation, but this could still feed into its decision-making process, push them to cut rates or not. Okay, let's look at what other figures we have today. Pending home sales, sort of least important US figures, and the least important housing figure. And we have crude oil inventories. Let's see if we will have more pressure on the price of oil or not. Remember, I'm just covering economic indicators relatively quickly because political events are far more important. Question here from Luca: copper and gold screaming higher, plus no Fed hikes. If the dollar stabilizes, ingredients for Aussie rally to the 78 area. Yeah, everything is positive because, well, a few reasons. To answer your question, first of all, we had a big crash and then we had a big recovery. Secondly, chances, as you said, of no rate hikes. And, well, China so far is also ready to provide more stimulus. Japan is ready to provide more stimulus. I'm not sure we'll have a rally to the 78 area. A lot depends on the elections in Australia this weekend, okay? I think I don't follow closely Australian politics, but I'll say this quickly. If the current party, the Liberal Party, Turnbull, if he is returned as Prime Minister, if he wins the elections, I mean, more certainty, a continuation, that's probably good news for the Australian dollar if he wins both houses of Parliament, lower and the upper house, also the Senate. And if there's some kind of deadlock hung parliament like we have here in Spain, then it's going to be, then I don't see the Australian dollar rallying to 78. Also next week we have the Australian rate decision. So it's not, it also depends on Australian things. I mean, the Reserve Bank of Australia could decide on cutting rates next week just because of Brexit, okay? I'm not sure they'll do it. Maybe they'll hint about it for the next decision, but I think anyway, rally to the 78 area is still premature. It depends also on things related directly to Australia politics and the central bank. Okay, let's talk also about events for the rest of the week. We have tomorrow German employment figures. Probably will show that, well, Germany, the number of people unemployed in Germany continues falling. Good news from there. We have the final UK GDP figure for Q1, highly irrelevant at this moment. The Brexit vote has an impact, and it already had probably an impact on Q2, but more importantly, it's the impact, I mean, it's the potential recession beginning in Q3. And tomorrow we have also the final, I mean, the initial inflation numbers, but this time for all the continent after Germany and Spain reported, will report today. US jobless claims and the Canadian GDP figures, always important for the Canadian dollar. On Friday, it's the first day of the new month, it's July 1st. Most importantly, we have the Chinese PMIs. Let's see if business confidence in the manufacturing sector in the world's second largest economy has been hit or not. We have the official one and the unofficial one. The UK manufacturing PMI could also be impacted already by Brexit because this is a survey, and the ISM manufacturing PMI, the first hint for the US non-farm payrolls next week. Okay, we'll have a preview also for next week's events separately. But before we move to next week's events, I want to talk a bit about the chances of I mean, a bit more about Brexit or no Brexit, okay? So on Thursday, Brits went to the polls and decided with a clear majority, 52% to 48%, to leave the European Union, okay? The result was clear. It's not a very small margin. There was a gap of 1 million votes between those wanting out and those wanting in. That, of course, as you all know, triggered a huge collapse in financial markets. It also has an impact on the real economy. It's uncertain. For instance, everything is uncertain. People living here in Barcelona don't know, Brits, what their future will be. There's so many Brits, pensioners, for example, living here in Spain and Portugal and France, they don't know what's going to happen. The same goes for Europeans living in London and in the UK in general. There's a huge community. Most probably they'll be able to stay, those living for a long time, but everyone that needs to take a decision, not a travel decision, but a business decision, a studies decision, work decision, that involves crossing the channel, either a Brit coming to Europe or the other way around, everything is on hold now. Okay, we already heard from financial services companies that they're working on moving their offices outside of London, and these are very high-paying jobs, as we all know. Okay, orders, as I mentioned before, coming from Europe to UK companies, it's sort of also on hold. Lots of uncertainties. What will be the next move? Okay, that's the economic background. We're already seeing the pressure coming. Now the political scene. We had the vote on Thursday. The results emerging very early on Friday morning. Friday at 7 GMT, 7:30 GMT, David Cameron got out of his residence at 10 Downing Street and announced that, the big headline was, "We need a new captain for this ship. I'm going to step down." Okay, so David Cameron is gone. Logical decision. He took he went for this EU referendum. Some would call it a gamble, and he lost. So he's out. But another thing he said, which is now becoming a big point of contention, he said that he will not pull the trigger by himself. What's the trigger? Article 50. Okay. Article 50 is in the European Treaty, is the clause for exiting the EU. He said, "I lost. I'm out of here. My the person who will inherit me as prime minister, he will have to take this decision." Okay, so Cameron got away from. He doesn't want to invoke this Article 50. He doesn't want to take the decision by himself. Now, we've seen a different reaction on the Leave camp. We've seen Nigel Farage talking about Independence Day, celebrating, and really enjoying his victory. On the other hand, Boris Johnson, when he faced cameras, he didn't seem that happy. Okay, Boris Johnson, former mayor of London, looks like Donald Trump, the leading candidate to replace David Cameron. He was a bit shocked by this decision, I guess, by Cameron, and perhaps shocked by the result itself. And it doesn't seem that he's also keen on pulling the trigger, because he knows that he will be responsible for the huge damage. David Cameron and also other British politicians said, "We'll first have some informal negotiations and then we'll invoke Article 50. The European Union said, "No, this isn't a possibility." Some wanted an urgent decision from the UK. Some said, "Okay, you can take your time, but we're not going to talk to you." That was a clear line from Angela Merkel, which calls the shots. We're not going to talk. We're not going to have informal talks. You're either in or out. Okay, no wishy-washy decisions. Okay, all this leads now. With every day that passes, we have more economic damage. With every day that passes, Article 50 is not triggered. The formal exit is not triggered. This, of course, raises the chances of a no Brexit, or if you want a regret of the decision, or an EU turn. Okay, many nice words going on. And now, how can this happen? First of all, with every day that passes and this doesn't happen, this raises the chance that it will never happen. And there is a legal opinion saying that it's not for the government to decide. Remember, the referendum was not a binding one. It's not for the government to decide, but for Parliament. In Parliament, there's an overwhelming majority for remaining in the EU. Most Labour members, most Tory members, all Liberal Democrats, all the Scottish National Party members, and also, I guess, those from Northern Ireland and from Wales. In general, most members of Parliament, I think 70% at least, are against it. Now, will members of Parliament now vote according to the will of the British people expressed in the referendum for exiting the EU, or for remaining in the EU according to their conscience, according to the situation in the economy, which is deteriorating on a daily basis? Okay, so it's quite a big dilemma. Of course, there's also the option that there will be an official Brexit, but the agreements, remember, it's a 2-year negotiation period, will resemble the current arrangements. That's sort of the Norwegian style. Norway has to oblige by the European laws of free movement of people, free labor. Basically, it's a member without being officially a member. So it doesn't have a say in decision making, but it enjoys or suffers or whatever you wish, everything that is European Union related. Okay, so that could also be an option. Now, this isn't certain because the British people have said their word, but there is a chance of kind of an EU turn. I believe that many Brits, including those who voted Remain, will be frustrated on one hand from overturning the democratic decision by the people, and the turnout was huge, okay? Others will be sort of relieved that Britain is not following that path. In any case, there's already economic damage and already a problem with democracy in the UK. Now, I'm talked a lot about this topic because it already has, I guess, the speculation, which is currently at a low level, already, I think, supports the pound at least just a bit. Okay, so at the moment we're already seeing, well, today the pound going a bit higher. I haven't seen any official political developments, but that's one of the reasons for the recovery. European stock markets are currently on the move higher. Okay, so another day of optimism in the UK, in Europe, in financial markets, also by the chance of a no Brexit. Okay, another thing that fuels this is that we're going to have a contest for leadership in the Conservative Party in the UK, and it's not so clear that Boris Johnson will lead. There are fresh opinion polls showing that the current Minister of Interior, Theresa May, that she could win over Johnson. So, and she is in the Remain camp. Okay, and will she lead as Prime Minister of the UK out of the Eurozone against her judgment, or will she respect the will of the British people? So everything is open. Okay. All right. Any questions? Anyway, seeing that European stock markets are moving up another day, and that goes hand in hand with the rise in the pound, the rise in the euro. Yeah. And we'll soon reach, let's see, I'm looking for recent developments. No, nothing new, but speculation on a no Brexit, albeit at a very low level at the moment, and well, the necessary recovery. Okay, I believe that even if in a few weeks we will have, amazing how well the FTSE is holding. Yeah, first of all, the Bank of England did come out to provide liquidity. The Bank of England could certainly cut rates, probably not at an emergency decision, but at its scheduled decision. And there is also the fall of the British pound also serves as a shock absorber. Okay, so it's not all that bad for UK companies, especially those UK companies that trade with outside the EU, with China or with the US. Okay, not all is terrible. And again, there is some hope that Brexit will never happen. Okay. All right. Let's move to the preview for next week. So this is a preview for the week of July 4th to July 8th. Okay. So on July 4th, it's a US holiday. It's the 4th of July, the US Independence Day. There it's really independence from the UK. So liquidity will be relatively thin. We do have some reports coming out, but they're not major ones. Anyway, expect some thin liquidity, and then perhaps interesting developments. On Tuesday, markets are back to full swing. Australia has a trade decision. There is some kind of a chance for a rate cut in Australia following the Brexit, but I'm not sure they'll be in such a hurry. Australian economy is not doing that bad. Oh, forgot to mention, on the weekend we have the Australian elections, so this could impact the open of the Australian dollar on Monday. Okay, so on Monday we'll have reaction to the Australian elections. On Tuesday we'll have a rate decision. Probably the RBA will probably not act immediately. Services PMI in the UK are coming out on Tuesday as well. This could already reflect Brexit from the fears from the biggest sector in the United Kingdom. Okay. Wednesday, we have the ISM non-manufacturing PMI, services sector report for the United States. It's a big one. It's the biggest sector, and a big hint for the non-farm payrolls. Last month, we first had the non-farm payrolls and then the ISM non-manufacturing PMI, but the employment component there was weak, sort of reflected what happened. So let's see if we get a hint, positive or negative one, for the NFP. Also on Wednesday, we have the Fed meeting minutes. These are meeting minutes from the June meeting, which came out just a week before Brexit. Was quite dovish, relatively ignored by markets which were obsessed with Brexit, well, for the right reasons. And remember, the Fed, this is not a raw protocol of what happened. This is a document that is revised until the last minute. So it could already reflect what members think about Brexit, or at least their fears, and could already provide us with hints about the chances for a rate cut or not. Probably not, but if we'll have some members also mentioning the chance of a rate cut, it could be dovish, it could be bad for the US dollar. Okay, so Wednesday is quite a busy day next week. Thursday, we have, for a change, the ADP non-farm payrolls, usually on a Wednesday, but because of the 4th of July celebrations, it's coming on Thursday. Hint for Friday's event, and jobless claims, another smaller hint. On Friday, of course, non-farm payrolls, big event in the United States. We had a terrible report in May, also impacted by the Verizon strike, and also not so good report in April. So this could be 3 in a row. I believe we'll have some kind of bounce. At least we'll have revisions. Also watch out for wages. So of course, an important one. And perhaps it'll be also, with this report, we'll have fundamentals taking back, economic indicators having a fresh impact on markets, and not only those Brexit or no Brexit calculations, not only politics, but also real data. Okay. And also, last but not least, for those who are trading the Canadian dollar, it's a jobs report day also for Canada next Friday, July 8th. So not a good time, I guess, for trading dollar CAD. But the Canadian dollar against other currencies, we could have interesting moves there as well. Okay, so that's the preview for the week of July 4th to July 8th. Okay, before we move to the wrap-up, I see your question. Do you expect, from Luca, do you expect the much expected, maybe not too much, domino effect to hit the euro dollar? So far, so good, one might say. Yeah, well, I forgot to mention that, of course. Well, there's so many aspects, I cannot talk about everything, but this is, of course, a good one. The domino effect of other countries wanting to leave the EU, that's, of course, a big risk for the European Union. We heard praises from far-right Marine Le Pen in France, far-right, I think his name is Geert Wilders in the Netherlands, Nigel Farage in the UK talking about Frexit, Nexit, and Dexit. Also, Denmark could perhaps want out. Left-wing Eurosceptic parties also exist. We had the elections here in Spain on Sunday. Podemos on the left wing is a bit Eurosceptic, not that much, and they had a big disappointment. Okay, still a hung parliament here, but a sort of shift more towards the mainstream parties with center-right PP gaining more votes, and also center-left PSOE means not losing as much as expected, and the new parties losing votes. Okay, so far, I mean, the immediate aftermath of Spanish elections, we haven't seen the domino effect, but of course, the European Union wants all this Brexit thing to end as soon as possible, perhaps even to punish the UK, okay? Because to deter other countries from leaving the European Union, from leaving the Eurozone, we had the same thing with Greece. Greece was punished severely in order to deter Spanish voters from going the path of Syriza, which is the path of Podemos. There is, of course, a chance of a domino effect, not immediately, but there is good credit. I mean, in my opinion, the vote in the UK was too much about immigration, too much racism was there towards the end of the campaign. And we've seen after the referendum, after the referendum, many ugly incidents of abuse. I think in British television they showed someone filming a few thugs threatening immigrants to throw them off the tram, and I mean, other passengers were shocked, and there were many more incidents like these. But that's the ugly side. There are also good reasons to dislike the EU. Okay, the European Union does not provide prosperity in the past few years. The way that the EU, especially in the Eurozone, the way that they dealt with the economic crisis is a total failure. Okay, too much austerity, not enough growth, not enough recovery. Quite different from the United States. Well, nothing is perfect. I mean, can't say things are perfect in the US, but the recovery has been much more robust, let's call it this way. And lots of democratic deficit, okay, in the European Union, too much regulation. There's still lots of issues with the EU, and politicians like Merkel, Hollande, Renzi, which don't seem that competent, and bureaucrats like Juncker don't make the EU that popular, okay? So far, I see the EU sort of trying to double down, to become more tough with the UK, and not going positive, not saying, okay, we got a blow from the UK, maybe we also did something wrong. It's not only racism, it's also racism. So anyway, domino effect probably more next year, but it depends on the developments. Next year we have elections in Germany, France, and a few other countries as well. So yeah, it's still early days. More questions here. We may be approaching seasonal climax for oil, and with Brexit risk hitting growth prospects and preparing low and well short oil. Okay, let's share your chart with others here. Yeah, I also see a potential for falling oil prices. So your target there is 45. Yeah, once we hit resistance, or in the summer, prices of oil go higher, but they can fall later on. That's what we've seen last year. Remember, with higher oil prices, production is also rising in the US. Saudi Arabia is pumping at full speed. Canadian wildfires are gone. Nigeria is still an open question. Venezuela is also falling apart. So there are many factors in oil, fundamentals and technicals. But with every day that Brexit is having its impact and we have no EU turn, then I think it's safe to say that there's a potential for less global growth and fall also in oil prices. Okay, so thanks for that. Another comment here, also the ISIS and terror threat. Yes, yesterday night we had a tragic bombing in airport in Istanbul, Ataturk airport. At least 36 people were killed. It's probably ISIS, but maybe also the Kurdish insurgency, the PKK. So it's also a big mess there, and in other countries it's always a threat. Yeah, lots of trouble in the world. Okay, this is a wrap up for the live market open for today, Wednesday, June 29th. Big themes in the markets are the post-Brexit crash recovery. Markets did have a turnaround Tuesday after huge falls on Friday and very significant falls on Monday. We had a big rebound. This is continuing today. British politics remain important, and European politics as well, more than fundamentals, more than economic indicators. At the moment, watch out for who's running in the Conservative Party, okay, in the UK, and watch out for the big question: is Brexit real or not? Will we have the EU turn or not? British politicians leaders from the Leave and Remain campaign, Cameron and Johnson, are very, very shy of invoking Article 50, of really going formally ahead with the Brexit, and there might be also approval might be needed in Parliament. With every day that passes, there's speculation it will never happen, and there's of course more damage to the economy. Speculation on a no Brexit is also supporting the pound, but markets are afraid that, well, the chances at the moment look low, but with every day that passes, I think chances are rising. Apart from that, we had final GDP coming out slightly better than expected, but US growth is still quite tepid. Today, we have German inflation figures, Spanish inflation, we already had that. The Fed favorite inflation figure, core PCE price index, pending home sales, and also crude oil inventories. Crude oil inventories could impact oil prices. Apart from that, these are all figures to accumulate, but the biggest impacts on markets, on the pound, on the euro, elsewhere, come from the political speculation. Let's start with the pound. Currently 133.80. I see resistance at 134 and 134.20. Support at 132.20. These are very calm days in comparison to previous days. I mean, today and yesterday. Euro dollar currently hugging the 110.70 level, resistance at 111.30, support at 109.60. Dollar yen finding some stability there at 102.35, resistance 103.30 and 101.40. Dollar CAD finding support at 130, resistance 130.80, not that strong. Aussie dollar showing some strength, 74.10 in the range between 73.75 and 74.40, and the Kiwi dollar holding above 70.50, looking towards 71 and perhaps 71.60. Okay, so that's the wrap up for today. Watch out for upcoming events. Chinese PMIs on Friday could have an impact, and next week, as I mentioned, we have a big build up for the non-farm payrolls, and that could see a comeback of economic indicators impacting markets. For today, watch out for headlines from Brussels, EU summit today without the UK, and until tomorrow afternoon, we'll know who's running in the Labour Party. In the ruling party in the UK, the Conservative Party, and how tight the race is between Brexiteer Boris Johnson and probably Theresa May as the leading candidate. We'll probably have a few other candidates as well. So politics are left, front, and center at the moment. So thank you very much, everybody, for coming to the show. Thank you for the great questions. As always, you can see a recording of the full show, the wrap-up, the preview, everything. It'll be published on FX Rate and also on Forex Crunch. And thank you very much, and see you next week, next Wednesday. This will be the format of the show every Wednesday for the near future at least. So yeah, that's it. Thank you, Luca. Thank you, Genghis Khan. Thank you, Ramon. Thank you, everybody. And have a great day. Have a great weekend. And see you next week. Thank you, and bye-bye.